And welcome back, everyone. You're starting to come back in the room from our last presentation. I hope you've continued to enjoy our VID conference today. We got another great company coming up here, Jaguar Mining. If anyone's with us for our first VID conference, we had Hashim and both Jonathan here as well, and they did a fantastic presentation. They're here again to give a great update. But really quickly, I just wanted to remind everyone, please, we'd love to hear from you in the chat room. Throw in your city, throw where you're from. If you're an investor with the company, if you've never heard of them before, we'd love to hear your comments in the chat function. Also, right now, you'll see in the handouts, in 2 seconds, you're about to see that handouts have a red dot beside it. That means we've just shared the presentation that's going on right now. You can download that to your phone or whatever device you're watching for. So now you have that presentation as well. And then lastly, in the Q&A area, which is right between the chat and the handouts, we'd love to hear your questions. The gentlemen here would love to hear them. They'd love to answer them as well. So whether you put those questions in now or throughout the presentation, we're going to have about 25 minutes or so with the presentation. They're going to go into very great depth into Jaguar Mining. And then after the fact, we're going to turn it back to questions and get through as many as we possibly can. So for the sake of time, making sure that people are here to see you guys and not myself, Hashim and Jonathan, I'm going to turn it over to you. And you just call me back whenever we're going to go over the questions there.
Thanks, Brandon.
Thanks, Brandon.
Thanks. Welcome, everybody. It's been almost, I guess, 2 months since we presented previously on the same conference. So I'm going to walk you through some of our updates since then. We'll go through some of the financials and the production releases that we've done for the third quarter. We're going to then get into exploration. You know, we've been getting a lot of feedback from our investors that they are interested in knowing what's next. As we establish ourselves, as we firm ourselves up for the 100,000 ounce production per year, we want to also convey to all of our investors and potential investors the next story. You know, why we think Jaguar is a great opportunity, why we think we are undervalued on that great potential. And I think we also want to share what Jonathan Hill, John Hill is our VP Exploration, joining me here today. What he's doing with the 65,000 hectares of land position that we have, with the free cash flow we have, and what we plan to do with that immense land package in the next year or so. So as we go through this, I'm gonna just quickly focus on the forward-looking statements. We will be making some forward-looking statements in this presentation, which are speculative by nature. So, you know, most of you guys have been following us most likely, but if not, then this might be a bit of a new information for you. Jaguar is establishing itself as a 100,000 ounce, re-establishing itself, I would say, as a 100,000 ounce producer per year. This last quarter, we released our production results, and we are on path to delivering that run rate on a quarterly basis. With the FX where it is right now versus the US dollar, we are in a very unique position to be just under $1,000 an ounce for all-in sustaining costs. Our treasury position we released in the recent press release is strong. We are virtually debt-free. We've announced a dividend, and our plan is to continue to pay a dividend on a quarterly basis. So, you know, all the dividend funds out there, you know, if they're listening, and you know, this is a great opportunity to invest in Jaguar as well. I think we will focus on the growth potential and the 62,000 hectares of land that we have, and what John wants to, how John wants to explore that. He's going to focus on that, and then we'll go into Q&A at the end. Just quickly, capital structure. Most of you guys are familiar with this, but Eric is one of our largest shareholders, followed by Sprott Asset Management, and then we've got a few other significant shareholders. We've been buying back shares in the recent past through the normal course issuer bid, and we are we continue doing that in September and the first few weeks of October as well. And we will utilize that program as and when needed. Looking at the balance sheet, I think one of the strengths that I've highlighted in my past is, the fact that we are, in treasury, we are growing. If you remember last conference, I mentioned this. Roughly speaking, idea is to put part of the money in exploration, part of the money to pay dividends, and part of the money to add to the treasury. Those are the three things we're looking at. As John is going to start exploration potential activities, the exploration spend should start going up in the next quarters, which is good news. We will see that I think, should be adding to treasury in the same amount going ahead as we did in the last Q3 quarter as well. We're paying off some of that debt, down as well, almost $500,000 every quarter. So we should be probably done with that minimal debt somewhere by the mid of next year. This is just short-term unsecured debt. It's not high interest debt either. Once again, dividend paying company now, and we'll continue our dividend policy going ahead as well. But I think the future is where, as our CEO says as well, the future of our mining company lies at the end of the drill bit, and that's where John is going to walk us through what we're going to do with our drilling. We released our third quarter physicals just recently, and very excited to see that that trajectory of growing quarterly production every quarter for the past almost 7 quarters in a row now, and moving towards that promise of establishing ourselves as a 25,000 ounce producer per quarter. That's the aim we want to establish. But I want to also emphasize something I did in our last conference as well, is the rate of primary development that we are doing at both these mines. You can see that primary development is almost up by 30% as compared to last year, and that's actually establishing our feet firmly towards a future sustainable run rate of 25,000 ounces per quarter. We talked about costs here, and we've talked about costs in the past as well. Jaguar has a very unique advantage, I would say, that the Brazilian real as compared to the USD is trading at almost 5.5, 5.6. As I quoted earlier as well, this has great benefit to our cash flow. Whenever there's a 10-cent move, we have almost $15 an ounce, $15 to $20 an ounce, depending on the production profile, benefit on our cash flow just for a 10-cent move on the USD BRL devaluation. And the inflation in the country is very, very calm. It's below 4%. So it's benefiting us a lot in terms of our cash operating costs. Turmalina delivered a good quarter, and actually we were very excited to see some of that high grade return from the past, which was something we hadn't seen in a while at ore body A, which is after doing all this development, Turmalina has 2 ore bodies, A and C. A is the slightly higher grade one, and we've started to go back more into A in our overall production profile. So that's reflecting in the grade, and we hope that will continue in the future as well. Pillars as well. As we said earlier, this is the underdog. This is the mine which used to produce less than around 7,000 or 8,000 ounces in the past, and this is now almost doubled itself in production. And I think this combined with Turmalina is going to be the key that unlocks the value in the company, because if you've got one mine that's producing really well and the other one isn't, it kind of does not work together that well. You want both of them to generate significant cash flow. I think with Pilar turning around in the past couple of years slowly, and Turmalina working on the same trajectory, we are very well established for that 100,000 ounce per year production. So with this, I'm going to hand over to John. As I said, we want this presentation to be about exploration. So John is going to walk us through that, and then I'm going to be online for Q&A at the end as well. John, after you.
Okay, thanks everybody, and thanks for the introduction, Hashim. As Hashim has alluded to, we've been in a transition over the last 6 to 8 months from very much focused on the turnaround story, getting up to that sustainable production rate. In parallel with that, the mine geological teams have focused on building the inventory of resources and reserves, which is now very healthy at both operations. More or less 5 years in terms of reserves, and double that with indicated and measured resources, and even more in front with inferred. We've been successful at adding resources at less than $10 an ounce. So we do plan to continue that in-mine exploration, which has been successful. There'll be some slides that I'll take you through quickly. At each mine, we've added a contract drill rig, and we've also purchased 2 additional diamond rigs per mine, which will be arriving in January. So that will continue with focused resource additions and reserve conversion at those operations. But now we can really focus on quality as well. As we've talked in previous presentations, we now have a very firm understanding on the structural controls of mineralization. We know about the depth controls, and we can follow that strategy now and replace depletion on an annualized basis as a minimum target, and grow the company by adding higher grade and higher quality resources at various levels in the mine. I'll talk to that a little bit later. But as Hashim said, we are in the Iron Quadrangle. As the slide previously said, continuously mined for 300 years, with very few people outside of Brazil really being aware that the greenstone belts in the Iron Quadrangle are at this moment the 3rd most endowed greenstone belts in the world, Archean greenstone belts, only behind the Yilgarn and the Abitibi in Canada. Both of those belts having seen way more exploration over prolonged periods in recent times. Right now there's a boom in both, and quite rightly. They're very fertile areas. The quad hasn't seen that same amount of activity for reasons which are really historical, and the area is really dominated in terms of gold previously by Anglo Gold and its predecessors, and Vale in terms of iron ore, which impinges on the exploration areas for gold. So having said that, Jaguar now has built up a very strategic land holding of in excess of 30,000 hectares in its own name, 28 areas, 28 concessions. And recently we've announced a doubling of that with the entering of a new joint venture with IAMGOLD. On this particular slide, the new areas that are added are in red, quite substantial, and the existing areas are in orange. So if you can also see the numerous occurrences associated with the major structures that are known about and in this belt, and host some of the very large deposits that have been mined in the past. The other feature about the quad is that the structurally controlled nature of these ore bodies, while having a fairly small surface expression, they do continue to great depths. The deepest mines were closed down towards the end of in the 1900s, 1999, 2000, by Anglo Gold, was 3 kilometers vertically below surface, but importantly 7 kilometers down plunge. So you're talking about consistent high-grade structurally controlled mineralization going to great depths. The 2 operations that Jaguar has, Pilar and Turmalina, while deep by sort of global standards, are still less than 1,000 meters. So we're very confident that there's a lot of potential at depth on those two operations. But going back to the surface, very little has been done. Within Jaguar's 28 areas, there's more than 20 known occurrences, some of which have been previously mined by Jaguar via open pits, some of which are ancient workings that go back 300 years, and some are sort of outcrops and other manifestations of mineralization. So we know that on all of our properties, we can expect to have a series of targets to prioritize and rank for exploration, and that's where we're turning our attention. The other thing that's very important is the slide that mentioned that we have excess plant capacity. We've got something like almost 3,500 to 4,000 tons per day of excess capacity. So the tenements that we now have in Jaguar's portfolio, and now bringing the IAMGOLD ground into play, gives us potential to find major deposits, tier 1, tier 2 type deposits that can immediately leverage this excess capacity. That's extremely important. If we find something, no matter what size it is, we can immediately, with very little capex, bring that to account. Obviously, there's the normal permitting and technical work that needs to go into that. But the really important thing is we don't have to go and build a plant after we've made a discovery. So with all of those sort of pieces of the puzzle coming together, we've put together over the last couple of years, our geological teams have been intact. Our mine teams have been drilling where we can afford it and in a focused way, but our exploration teams have been really walking the ground, assembling a portfolio of really good quality targets, which we are now beginning to address with diamond drilling. I'm just going to stop there for a second, zoom back to a couple of sections on the mines just to show what these ore bodies and what our targets look like in 3D, and then I'll come back and take you through in more detail the drilling and the exploration that we've kicked off recently and how that's progressing, just to set the scene for how we're moving forward with this strategy. Hashim's been through all of these commitments to shareholders, and so I won't dwell too much on that. The big area is really to grow the company through the diamond drill bit on various fronts, keeping in mind the excess plant capacity that we can leverage immediately. Okay, so in the Iron Quad, we have a real advantage. We have a really good team that has been working in Jaguar's mines, looking at the detail, understanding the geology, and applying the knowledge that some of our geologists have going back 20, 30 years, where they've been able to go underground in some of these historical mines. That knowledge is being reapplied in a 2020 context, and paying dividends. There's many things that we can do now that we couldn't do then from a technological point of view. We have the availability of drones and the like to help us with our interpretations and things like that. As I've mentioned, we've got numerous exploration targets. It's a good problem to have, but we have to also be fully aware of how they are prioritized in a portfolio sense, so that we can address and move forward the best ones first. So clearly we're looking at the best targets, and with a view to where the plants are and that excess capacity. And notwithstanding the fact that within our mines, we are still finding new mineralized zones, new ore bodies as we understand the structure. And we have, as I mentioned, continued with that strategy, increasing the capacity of our diamond drill rigs underground and just refining our models on a sort of a regular basis and generating targets and testing them in a sort of a structured way. Just moving back to the same slide, just highlighting there in the red boxes some of the big deposits that have been mined previously, that contributed to that 50 million ounces plus of mined endowment since 1695. The big mine, Maravello, sort of in the upper central part of the slide, that's produced in excess of 10 million ounces over a period of time. And even though there's still endowment there, it's very deep. There will need to be some heavy capital involved with opening that operation up. Anglo's flagship mine, Cuiabá, 10 million ounces of endowment, over 6 million ounces of production to date. I also want to highlight the Bento Mine, which is next to our pillar mine, Craig de Situ, another of Anglo Gold's operations, multi-million ounce gold field there, and Iron Gold has a fairly new discovery called San Sebastian, just right next door to our Turmalina operation. So there are big mines that have already been found, but very little work has been done over the last 50 years between those mines. But in terms of exploration, due to the fact that the ground has been held by very few people, and the conditions haven't really allowed more than head frame type geology or in mine geology and exploration like we've been doing. So, but right now things have changed. We are in good shape, and we're going out to tackle all these other areas that are highlighted on this slide. We've mentioned the increase in reserves and the life of mine. It's been a very successful strategy from Jaguar over the last 3 years, and now we have, as I said, 5 years of reserves at each operation. Just to show you quickly, this is the Turmalina mine. Once again, high grade plunging ore shoots going down to great depth. The A ore body, which is the major one on the sort of left part of the slide, we're still tackling that at depth. We're down there at 12 level. We've drilled it to 16 level, another 200, 300 meters below the last mining level. The ore body's still there, still the similar grade, similar ounce per vertical meter profile. And some of these intercepts are just confirming that since our last resource and reserve update, we've done a lot of drilling, and so we will continue to add materially to the resource inventory on that mine, on ore body A, and then the other ore bodies on the side, which are much shallower, ore body C, which is split into several high grade shoots: C Southeast, C Central, C Northwest. These are all being developed at the moment. C Northwest, right up on 1 or 2 level, we've just intercepted that recently. Some very interesting material coming out of that, and even a mining block with 4,000 tons at 4 grams, right up there within 100, 200 meters of surface. C Central continues to give us some very high encouragement in terms of grade thicknesses, well in excess of 25 gram meters, and you can see a whole series of other intercepts coming into play as we continue to operate and drill those ore bodies. This is a similar vision, just showing the breakup between measured, indicated, and inferred resources, and where the drilling has been ongoing since our last resource update. Blue is indicated, yellow is inferred, and red is measured. Similar picture again, just with that grade thickness. Just once again, the theme showing that structurally controlled, high grades, controlled by a particular direction that we're aware of and we target when we drill. Once again, just showing you some, where the impacts have been since we've released our last reserves and resources. Very similar story at Pilar. We released recently in May. We've carried on drilling. We're still having a lot of encouragement all through the mine on the main bandline formation ore bodies, as well as the ones that are marginal to that. In particular, the SW ore body, that's now sitting there at 20 or 30% of our reserves. The strategy is continuing. Why would you change it? We're producing and accessing new ore reserves very, very cheaply, close to infrastructure. Same story, just showing you where the drilling is actively focused, and recently reported intercepts, all consistent with the previous resource reserve grades that we see, and as Hashim said, with grade control and more stringent understanding of the ore body and controls, we are producing now closer than we have been previously with our reserve grade and our mine grade. The gap is actually much less. We're talking about very complex internal geometries. This is just a schematic at Pilar, just showing you that we're dealing with one folded BIF horizon in red, which has been basically sliced up a bit with later faulting. What we fully understand, the controls and mineralization, we've mapped and we've modeled all of these faults. And the individual ore shoots are very well constrained by development and by drilling and by mapping. So this sort of mine scale understanding of the controls of mineralization and in particular of high grades is really playing dividends on the mine itself. You saw the results. But really importantly is if you zoom out regionally, we still see the same patterns in a regional geological sense, and that really helps us with our exploration and our targeting. Just showing you the amount of, you have to do a lot of drilling in these types of deposits because of the complexity as highlighted in the previous slide. But you build this into your plan and you can benefit from that and build sort of the information flow is very, very fast and very efficient, and the guys are utilizing the information on a daily basis in the mining cycles. Just a few slides, just showing how just going back to Turmalina, just showing how that resource and reserve profile has improved over the last few years. A lot more material coming from sea ore body, shallow levels of the mine, allows us a much more flexible mine plan, and even below those sea ore bodies, we do believe that the structures will extend as deep or as ore body A. So that's a very large search space for us to add additional ounces, and we are targeting that as we move forward, and we can find areas to drill from. Same for the resources, and moving back to Pilar, very similar story. What's interesting at Pilar is that the mine has gone down following the sort of central BIF packages, which are slightly higher grade than some of the other ore bodies that were apparent in that earlier slide. But we've gone back and we found areas where there hasn't been drilling or there's been limited drilling. Now with that extra structural understanding, we can predict where these ore shoots are lying, and as a result, we can bring a lot more material back into the mine plan that's been left behind at higher levels. And there's obviously a very good benefit in terms of margins and costs, and also the flexibility that this brings to the mine plan. And once again, we're seeing that in our quarterly production figures. Just similarly, the same thing, same story on the resource side. Okay, so now we've really, how are we doing for time? Now we've really moved back to the quad, and what I want to take you through now is the 4 projects where we've started work in early September. These are priority targets that have been selected at each of the next to each of our mines and our plants, and with the exception of the iron gold tenement package, which is next to our CPA plant, which is currently on care and maintenance. But it's very clear when I get to talk a little bit about the iron gold area that a discovery in that area can really change the profile of that particular facility. And even though our ground immediately around that plant is very prospective, there's 2 underground mines there. The iron gold ground is really strategic. It's on the major structures, and there's a lot of more prospective stratigraphy in there. Iron formations tend to have higher in the quad, tend to be higher grade and more consistent, better quality ore bodies. And that's one of the triggers for chasing this joint venture with Iron Gold was the existence of those stratigraphic packages of folded folded banded formations right next to our Pacienza plant. But anyway, moving to I think the first one off the rank is Corrego Brown Down. I'll talk to that right now. Corrego Brown Down was a regional target that was generated in 2017 and followed up in towards the end of 2018. What's very exciting is the sequence of six images. We generated that very extensive gold in soil anomaly, but coincident with that, we have a very strong multi-element signature as well, with arsenic, antimony, and tellurium. Those four very colorful images on the right. The Corrego Brown Down project itself was an area where we originally went into in 2019 with an auger drilling program to follow up that soil anomaly, and we got some very spectacular initial results. The best one is, it's been paraded around 10 meters at around 20 grams from surface, right at the apex of that regional fold structure. And regional fold structures, which is a theme that I've mentioned earlier, and a theme that will continue to be mentioned in the quad, is where you find big deposits in this region. And all of these images, and the radiometrics image on the left, and our geological map in the middle, show this fold structure, shows parasitic features on the limbs of that fold, and we have once again this highly anomalous gold in soil, values well in excess of 100 ppb, going up in excess of a gram, hundreds of ppm arsenic, and antimony and tellurium. So really, when you look at a regional target, this is extremely exciting for us. What's missing now is a permit to drill, which we've applied for. We expect to receive it sometime before the end of the year. Within 3 days of getting that permit, we'll be ready to go and drill there. The fact is, though, that we can already access some other parts of this area where we already have access for drilling, and when we finish some of the other projects, if production carries on as well as it has been, drill production, we will be able to drill some of these things this year already. This is a magnetic image from a 50 by 50 high resolution drone survey that was flown earlier this year, and in red at the top of the image, where the other little boxes are, is some initial three-dimensional magnetic inversion work, which is very encouraging. It's already given us 3 very clear targets to follow up. The top one already having a 10, 20 gram intercept on top of it, and the signature of these, of the same sort of signature. We know it's a magnetic target because we've measured that in the drill hole, and we're very confident that these fold closures, as displayed in red going down the limb of the regional fold, is somewhere to start testing with a drill bit when we get in there. Having said that, the whole structure lights up, as you've seen earlier, with the geochemistry, and some of these further to the south, there's a couple of old underground mines, plunge persistent. There's one called Jucaviera, another one called Moita, and so we have signatures of those mines in the magnetics now, the geochemistry, and so we have in excess of probably 100 targets, quality targets to test in this block of ground. See the scale bar on the bottom, that's a kilometer, so you're talking about a 4 kilometer by 4 kilometer, sort of area right there. And our KT, and just remember, our KT plant is sort of only on the bottom, off the bottom of the image, 5 kilometers from the Corrego Brown Down outcropping mineralization. Moving across to Zona Basal, which is next to our Turmalina mine. This was we've started drilling here in September. We've completed 12 holes to date. We chose this area, Zona Basal, because of a whole series of things that we find important with our targeting criteria. The image itself basically is a magnetics reduced to pole image, and it just gives you a a flavor of what the signature looks like over zona basal, going up to finer, as compared to the area we're mining, down to 1,000 meters, ore body A, ore body B, C, southeast, C, northwest, those yellow diamonds down on the right. So up at zona basal, there's a very extensive gold in soil anomaly, once again accompanied by arsenic and antimony. There's very compelling geological and magnetic responses that coincide with that anomalism. We did trenching, we got bedrock gold sources. So what our drilling has been doing is really going through and just doing a diamond drilling to test some of these targets, to try and frame the project, understand what's happening at depth, and to just frame what sort of opportunities that target is presenting. There are many more targets as highlighted on that image for us to test. Zona basal, the soil anomaly, there's 3 zones, but collectively, in excess of 3 kilometers of strike length associated with just the golden soil anomalism. This is only 8 kilometers from the plant. We do expect to see something that could be mined presumably by open pit methods, and also once again we could also look at underground. This next image is just a zoom in on the golden soil anomaly and where the trenches were. The left image is really the geological map. Structurally, we're sitting on a limb of a major regional fold structure. Once again, good host for mineralization in the quad and in this particular region. I'm going to highlight just on the right side of the image. There's a little yellow figure there that just shows you the strike extent of the ore body A, ore body at depth. Just to give you an idea of the scale of this particular anomaly. So 12 holes into a program, we've only tackled a small portion of the overall target. And the initial core looks interesting, so we do expect to get some news flow out in the next month or two. Notwithstanding the lack of laboratory capacity or turnaround, which is affecting globally the exploration industry. We have the benefit of being able to screen our drilling with our own laboratory, just to help the geologists, evaluate the effectiveness of their drilling. But obviously, we have to wait for the sort of independent laboratory to confirm the assays when they come in. So we're very, it's the first project that we've drilled at Jaguar in the last 4 to 5 years outside of the mines. So this is a really interesting and important program for us, which we've got high hopes for. Just moving across, the finer deposit also at Turmalina is a refractory ore body that was drilled and discovered back in the 1970s by Anglo-American. It has not been exploited since then, other than the oxide portion off the top, which was free milling. Obviously, the remaining resource is of the order of 400,000 ounces, but importantly, it's a 7 gram per ton, 400,000 ounce resource. What Jaguar has done, taking into account its excess milling capacity, we've drilled 4 holes to get high diameter or large diameter PQ core for reviewing and redoing the metallurgical test work. There's been advances in technology since then that fine grinding, high cyanide leaches and the like, and even flotation cells, low capex would be of interest to us if we could find a buyer of the concentrate. We're finding with the drilling that there's good potential for a big open pit or an underground on this ore body. Our structural mapping in the pit and in the core and the logging of the core showing, now our eye is in the region where we're seeing strong structural control. Looks like we've identified 2 high-grade shoots that we can still chase down at finer, irrespective of the that resource that I've mentioned, there are very good, compelling, high-grade targets to follow up, and we plan to do that. So the metallurgical samples have been taken and left the mine for analysis, after which we'll select the samples to send to the test work laboratory, and there'll be news flow on that, I guess, before the end of the year. This is just a section, through that resource model, going back to 2015 when it was in our technical report in those days, if you need to read up on anything on finer. Of interest as well is, it's still open at depth, and the last intercept, which is, we don't know the true thickness of, but it was 9.7 meters at 10.2 grams per ton. So that's a good, 90 plus gram meter intercept. If we can get the, we're 1.5 kilometers along strike from an underground mine. If we can sort the metallurgy out, we definitely have a very good opportunity to access in a reasonable amount of time some high-grade material. Moving across to Pilar, this is the third area we're drilling. We've drilled 9 holes. Pilarzinho is really a tenement that we need to present a final report on in the middle of next year. So that was sort of driving our decision to drill it, or largely driving our decision to drill it sooner than later. But in its own right, it's a very important location on the main structure that the Pilar mine is exploiting. It's a regional limb of that major fold. We have good surface indications of mineralization in trenches and old Portuguese workings, and we're basically doing a series of along strike drill holes beneath those trenches to pick up structural work and to build our knowledge of that particular limb. SW, which is the same structure right next to the mine and what was originally mined at surface at Pilar. There's a 3-kilometer section where we need to infill that we can hopefully get some surface material, some oxides, and we'll also be tackling that from underground as it's becoming a very important reserve in its own right on that property. So that's very exciting. We've, as I said, we've drilled 9 holes already, and we've intercepted some 3 or 4, 5 interesting intercepts of banded formation in those holes. Okay, so really, that, in a nutshell, that's where we stand with exploration. Where are we going? Correga Brandão is our flagship target to drill this year still. We still have many other targets to the south of Corega Brandão in that package that we will drill once we're finished at Pilarzinho and the Zona Basal. We have many other targets to move the rigs to. Clearly, when the results dictate, we'll return to infilling and building a resource if that's justified by results. Really, the Iron Gold ground, we're 30% of the way through a high-resolution airborne survey. We'll be putting some information on progress with that out shortly in the news release. It's the biggest airborne drone survey undertaken in South America to date for magnetics, we believe, and it's going very well, and the results are really giving us a very good insight to the geology, and will allow us to refine some targets to drill as soon as the second quarter next year when permitting's in place. So that's where I'm going to leave it.
Thanks, John. And I think I'll just wrap it up before I hand over to you, Brandon, for Q&A. But I think second largest land position, that's the emphasis in a region which, although very few people know about, but it's the equivalent of Gilgan and Abitibi in Canada. I mean, Canada, Abitibi is a very well-known mining region, right? So, those two things are extremely prospective for us to find answers here. And John mentioned about Corega Brandão. When I was talking to our CEO about that target, he said that it's got every variable of being, it's shown every variable in terms of being a multi-million ounce, prospectively multi-million ounce discovery. It's too early to say that right now, but the way it's building up, I think it's very exciting for us, and we hope that is going to be our big win as well. So off to the questions now.
Yeah, absolutely. Now we'll try to get through a few of them here, as it is. We've got about 10 minutes left before we go over here, but that's perfectly fine because this whole conference way set up is meant for going into depth. So Jonathan and Hashim, you've done a great job of really explaining this story. I'm sure even investors who've been in your company for quite some time learned a lot there. So I appreciate that. But why don't we just jump right into the first question here, which is, says, gents, how confident are you that the company has moved past the legacy issues and production will be sustainable moving forward?
So I think what I would say there, and I mentioned this in the past as well, when you have to look at any company's production capacity for the future, there's a few indicators you look towards. Number one, you look at how they are ramping up their hiring profile, because you need your workforce to come with that as well. We've been increasing our workforce to support that higher production profile. But the most important KPI is the development meters. Your main ramp that goes down and swirls down in an underground mine is actually the further ahead you are where you're mining means that you're developing and you have more options in your mine plan in the future. That's always the bottleneck. We had that bottleneck for 2 years. That required investment and time. We've fixed that bottleneck now. So I think our confidence on the turnaround is pretty high, considering that bottleneck is mostly out of the way.
Beautiful. I'm going to ask another question here. It says, Dorian writes, congratulations on creating great shareholder value to date. But as a new investor, how do you create additional value that hasn't already been baked into the share price?
So I think as I would, mining companies, all of them are different, right? So it's not easy to compare one with the other. That being said, we all do peer review comparisons, right? And when I look at some of the companies which are our size, and I would specifically mention about West Dome, great company as well, great management team. They're valued at almost 4 times where we are right now. They produce almost 90,000 ounces a year. Our free cash flow is higher than theirs. Our production profile is higher than theirs. They are 4 times valued higher than us. Now, of course, there are certain factors there. They are in Canada, so even if you apply a 20% discount to being in Brazil, you can take that out. They have found a new ore body, which I'm sure Jonathan Hill is going to find for us as well very soon. And you can allocate a value of $500 million to that as well, maybe, or maybe less than that, maybe $200 or $300 million. Even after taking those factors out, Jaguar still has an upside from where it is to where it should be by a factor of almost 100%. I think we should be trading at 1.3 to 1.4 at a minimum right now. And I think that's going to come with time as investors get more and more confident in our ability to continuously produce 25,000 ounces per quarter and give dividends. But the next big jump after that is what John is going to find for us.
Yeah, absolutely, and I appreciate that. Another question: there's quite a few here on Paciencia. Forgive the pronunciation of that, but are there any future plans there, or is that mine shut down forever? Is one question, and then there's about 2 or 3 other investors who are just in general asking for any type of update on that in that area there.
John, you want to address your discussion, because John has been leading our discussions with Anglo on the royalty side as well, and also Paciencia with respect to what we plan to do there.
No, really. It's a two-phase thing, really. We've started a growth team to look at these opportunities in the company. We've got a multitude of closed down, previously mined areas that could be reopened under new circumstances. We're conscious of the excess plant capacity. CPA itself is it's in good shape. For a mine that's been on care and maintenance, they turn the mill around over every week to make sure it's still working. Clearly, there's investment required to bring it back up. The one thing that is on our minds is that royalty issue with Anglo Gold, but more importantly, we're reframing that whole project from a geological point of view. We're actually busy building a team to address the CPA license itself from first principles. And as I sort of mentioned in my presentation, Iron Gold ground right next to it is very prospective. There's over 60 kilometers of very prospective folded banded iron formation on those properties that hasn't seen a drill hole, but has got strong golden soil anomalism. It's got all the ingredients very much in the same magnitude as Correga Brown Down. We just haven't basically framed that yet. So and that obviously a royalty doesn't apply there. So but we have a team that's being formed, and that the scope of that team is to actually look at CPA and what it will actually take to get that operation back and running. My responsibility is giving something to put into the mill, but then there's the engineering and the permitting that needs to be addressed in parallel with that. So it's front and center. That is a very underutilized, highly valuable asset to Jaguar. As now we have the other operations working well, it's time to turn our attention to these types of things.
Absolutely. And I appreciate that. I think you hit 2 or 3 different investors there with that answer. We've got about 4 or 5 minutes left here. We have another question saying, John, can you speak to how prioritizing of targets is being done? Who is making the decisions on what targets get priority? Are you potentially in a situation here where there are too many targets and you get stretched too thin?
Now that's a very good question, and I've had a lot of experience with that type of that type of issue. When you're a country manager, you have many different regions and many different targets to prioritize and evaluate. Essentially, you've got to manage exploration like it's a portfolio, and there's many ways of demonstrating that. There's companies like Barrick or Randgold, use a triangle where they rank their targets according to the level of information from the operation right down to whether it's a concept or it's a soil anomaly or anything. Basically, we have a database, and there's a whole lot of things that need to be looked at in the ranking process. But a lot of it's got to do with the business plan of the mine itself, what the metallurgy of the plants that we have, the proximity of the targets, the size potential. There's a whole lot of things that go in it, and then there's other things non-technical that go into it, like permitting and the placement of infrastructure and the stakeholder engagement. We look at all of those things. It's like throwing everything into a big bucket, and then sieving out all the ingredients and things coming out in an ordered way. So basically, my team has taken hundreds of targets, and they've basically collectively organized them into a matrix where we ask a whole lot of questions, and then the projects get ranked on that basis. The targets that we've currently drilling are the best targets that we have because of their size potential and all of the ingredients that Hashim was talking about, all of the variables, the soil geochemistry, the structural context, the magnetic data, the multi-element geochemistry I've mentioned. Whether there's been previous work done there, if there's previous work hasn't been interpreted properly. Now, even the metallurgy is important. You don't want to find something that's high grade that is refractory, like finer, and concentrate on that, and then find out that you can't put it in your plant for one reason or another. So, and then right now there's a lot of extra technology available, AI, that help geologists organize their data in a much more efficient and sort of productive manner. duplicating or replicating the table with many layers of, the light table with many layers of information. We're also looking at doing some experimental work on various data sets in the AI space. We're really open to any ideas and experience. We've got young geologists coming out of university with the technical know-how to manage these programs, but also the old guys that have walked the ground and can contribute from knowledge which would otherwise be lost.
Absolutely. I'm going to ask one more question. Jonathan will speak for yourself as well. You got to try to answer it in 2 minutes or less. I'm blending two questions here. The questions from Dorian is asking, as you continue to drill at greater depths, how does this impact your AICS? Or sorry, forgive me, your AISC? Is there a ratio between greater depth and increased AISC percentage? As I believe we've actually have we lost Jonathan there actually?
Well, I can answer that question in the absence of John, but I think
thank you.
There's two types of drilling. One is drilling within the production phases to improve your grade and improve your information about the model. That's part of the operating cost and AISC, all-in sustaining cost. But when we talk about doing drilling in the resource, which is below us, and we talk about that converting into the reserves, the drilling itself is not very expensive as we go down. I think what becomes more expensive is that development cost per meter as the ramp goes down, because now you have to haul up a bit more. So the idea is to get, higher grade. I mean, if you look at these ore bodies, they are pinching at the top, but they usually become wider at depths. And that's where, as you go deep, you increase grade, and by default, your costs remain balanced that way. But from a drilling cost, it should not impact at depth.
Gotcha. And Jonathan, we've got you back here, but we do need to be moving on to our next webinar. For anybody who didn't have their questions that were answered in here, please reach out to the company. They love hearing from investors. I know this because I've spoken to both of them, their IR team. I know that they're here to answer your questions. So please feel free to reach out via email. Gentlemen, I appreciate it very much coming on here and giving all this detail. And for all of those in attendance, we'll be moving on to our next webinar in just a minute here. But Jonathan and Hashim, if you were to guide investors to one area, where would it be?
Go ahead, Hashim.
Okay, I'll go ahead. I think
my exploration program closely.
Yeah. I think I was going to say the same. I think that's where the excitement is. The exploration program. We keep reminding John that he is carrying on his very wide shoulders the entire exciting future of the company. So no pressure, but
our budgets have increased remarkably. We started with 3 million. We're spending 8 million this year, and next year we might double that with more based on success. So we're well positioned to really capitalize. We've added 40 people to our team. We've got to get them up to speed and into the field with the right equipment and safety structures in place, but we're very excited and we're very satisfied with the progress we've been making so far.
All right, gentlemen. Well, we do have to end our webinar today. Thank you again for your time and coming back onto our conference. I look forward to hearing and seeing all the different advancements that will come with your company in the very near future. Enjoy the rest of your day today, guys.
Thank you.
Thanks, Brandon. Cheers, mate. Bye.
Absolutely. Take care now.